Hello, what's up guys? What's up traders from all over the world? You are welcome to yet another live session over here. It's the Tony Trades channel, and once again we are back at it. We are going for the fundamentals, and it's such an incredible week. Lots of positive results, lots of profitability. And just as always, we are setting new highs, setting new limits in the financial space. Now, this is going to be one of the most volatile releases, as usual, in global markets. All right. What do I mean by that? We are looking at the US CPI Consumer Price Index. All right. Now, if you go to your economic calendar, you can be able to see this, all right? The number that moves the Fed, right? The dollar, gold, and your portfolio in seconds. You're going to see this live and how it plays out. So I want to restart that. I'll be using pocket options. You just sign in and we're good to go. Now, today's stream is called the Inflation Impact Trading US CPI Live, okay? It's all about precision here, reaction and real-time strategy. We'll trade the data as it drops, all right? So I'm aiming at this. We'll do that live, and it's all about how you utilize all the tools that you have, all right? We're going to read each candle and execute step by step using structure, all right? As always, I emphasize risk management, all right? You got to be able to control yourself. And pure focus, as simple as that. So before we dive, please hit the subscribe button, all right? And drop in the chat where you're watching from, all right? This promo code will be helpful for you. If you're signing up, you can get 100% bonus on your first deposit. Now, without wasting time, we have about we have about 7 minutes, all right? Now, this is our second live stream looking at CPI data, and this time I want to do I want to make it a little bit different. How? By involving bringing in the macros, right? So it's some kind of context now. This CPI print is very crucial. It's extremely crucial. You could check out the data from the official US Bureau of Labor Statistics. Once again, just go to the official website and you could check out the latest releases, all right? Now, here's what we're expecting from the US Bureau of Labor Statistics, okay? According to the calendar, we're expecting We're expecting 0.3%, all right? For the headline CPI month to month. We're expecting 0.4% for the CPI month to month again. So as we suggested previously, this will have an impact on how the Fed will decide on whether to cut rates or increase rates, all right? And of course, 3.1 for the CPI year to year. Now, last month, CPI came in very hot. That was 0.4 last month. And it triggered a USD spike. You all saw that live. We also saw the DAX sweep and a gold flush. So today's question is very simple, right? Very simple question. We're going to ask ourselves, does inflation cool or does it stay sticky? Because remember, if it stays sticky, the Fed delays cuts. That means yields jump and the USD strengthens. And vice versa, right? If it stays sticky, for example, the Fed delays cuts, all right? Yields jump and the USD strengthens. If it cools, rate cuts bets revive. Then we have gold, we have all the indices, and risk assets pop, all right? So that's the battle we will be trading today. I want you to keep a very keen eye on the data from the official website. So looking at CPI basics, CPI basics. CPI is consumer price index, all right? What does it measure? It measures the changes in price, okay? It measures the changes in price of fixed basket of goods and services that urban consumers pay for directly, all right? There is a very big difference between PCE and CPI. We mentioned previously that PCE is the personal consumption expenditure price index. What it measures is price changes from a wider range of goods and services consumed by, households, including those purchased by third parties. So our focus today is going to be on CPI. So here's the thing about inflation that you need to know. So as you can see here, we have all items. We have food, we have energy, we have shelter, we have medical care services, and so forth. Inflation is like a silent tax, all right? It's your money not shrinking in numbers, but it shrinks in power, all right? It shrinks in power. So CPI, Consumer Price Index, is how we measure that loss. Imagine you could buy a loaf of bread at, say, 50 cents, and fast forward five years, you're buying the same at, you can only buy half of that. So the difference is pretty much what CPI measures. Now, when CPI runs very hot, it's like the market heart rate spiking. Everything else reacts, all right? We have yields rising because investors demand more return. The dollar strengthens as capital rushes into high interest. We have gold, which pays no yield, usually dropping. Stocks feel like squeeze. They feel the squeeze as borrowing costs rise and liquidity tightens. So, but here's the deeper layer. When we look at core CPI, all right, it strips out food and energy. So from the official site here, you could see that core will be looking at everything else besides food and energy to show the true stickiness of inflation. What the Fed really watches, it watches shelter, as you can see here. Shelter is key. Wages are the culprits, and they move slowly, but they keep rising high for months. So remember this. Headline tells the story. This headline will tell the story. This one, all right? While the core will tell the truth. So if we expect a hot CPI print, all right, we'll have delayed rate cuts. And then strengthening the dollar and shifts capital out of gold and tech into safer yield assets. So inflation isn't just some kind of moment. It's real momentum. Each print is a Fed speech in numbers. So we would like to position ourselves really well. So let's break it down here. So we're waiting for about 2 minutes before the data comes out. We'll refresh the page. So Consumer Price Index measures how fast, again, prices rise for everyday goods and services. We want to focus on the core, right? So if we have shelter inflation, housing and rent, these account for over 1/3 of the CPI. So it moves very slowly. So we're going to be focusing on everything. Energy and food, those move fast and cause the spikes. All right. If today's number shows shelter still elevated, we get sticky inflation. That means Fed is a little bit cautious. I mean, this might seem very new to many, but we talk about this in my live sessions, and you could also check out my Telegram group for more details. I'm just kind of giving you some background information on how to read these fundamentals. Now, if we're looking at the charts, we're going to be focusing on USD CAD. We should expect some spikes coming in the 1 minute. I'll be opening up USD CAD. I'll also be looking at gold and just the majors, Euro USD. I want you to see how the behavior of the candlesticks work right now. We're having the data coming in about 10 seconds. We'll also look at how to read the macro map, right? How does the macro map look like? I always like to have some kind of cause and effect flow diagram, whereby we have, if CPI increases, yields will increase, USD will increase, gold will decrease in that case, and so forth. So there we have it. Pending, we just have to refresh, and there you have it. Core CPI came out at 0.2%. Very, very, very dovish. We also have, oh my goodness, this is really big. We have 3.0. That means we should have a very weak dollar, and vice versa. So gold, so far no reactions. Don't forget that we are looking at the session timings. Currently we have 3 sessions, one at 8, we have one at 11, and at 14 for the New York. So we're in between the New York and post London session. So you want to keep that all in mind, and we will start to dissect the numbers. Go to the official website, US Bureau of Labor Statistics. Go to the, we have any publications there? Check it out. All right, that is for now. Farm payrolls, we want to look at major latest releases, right? We have the consumer price index set for today. Consumer price index. Now, just as always, we have the summary. So because we don't have a lot of time, usually over the weekend, you take some time and read through this particular summary. And your main aim, you want to look at what's happening with the core, right? What is happening? Ask yourself a question: what's happening to yields? What are the yields doing? Remember, yields are just simply the return you get from holding a government bond. So what happens to it? Investors want higher returns to compensate for inflation. So the effect of the yields rising will make borrowing more expensive, and of course affect investments in stocks and gold. Now, if the dollar strengthens, right? If the dollar strengthens, for example, we're having very bad data coming out. If the dollar strengthens, if it had strengthened, we're looking at the dollar compared to other currencies, right? And for that, I also have a very incredible tool here that I like to use on bar chart. You just go to barchart.com and check out the Forex market map. All right, where we have the base currency and the quote currency. You could tinker around and just see what the US dollar is up to. That way you could get some more confirmation on the strength in that particular session. It of course changes over time and is very dynamic. So if stocks and gold often drop, right, liquidity, for example, tightens. Stock indices, we have NAS 100, we have S&P. These represent the overall stock market. So the cause would be rising yields, increasing borrowing costs for companies, and reduced liquidity. And the effect of that would be equities often, pull back or show some kind of choppy price action after a hot CPI print. In this case, we've had some sort of cooling going on, right? Cooling, because we have 0.2 for the core, we have 0.3 for the overall, and the year to year, which is 3. And in this case, we will have yields dropping, USD and gold, so forth, crypto popping up. We have the alt indicator here. It's been very tough for my crypto boys out there, and I mean, we do a lot of rotational trading, and we also tap into crypto. We have very nice bots out there for you. You could also check that out in my group. Use them. I've spent plethora of time building these tools for you. You want to check them out and use them for your advantage. All right. Now, coming back to the insights. So think of it as think of it as some kind of chain reaction, right? First, you confirm market structure before trading, all right? We're looking at USD CAD. There you have it. We're having CAD pushing, as we mentioned, though it's a little bit we're having, let's see, we're having USD CAD falling at 1.38629. Now this is a very not big of a move that I would expect, but you want to correlate that with other instruments and see what's going on. You could use simple tools like support and resistance to sort of confirm some market structure. We'll be trading, we'll be sharing with you some of the insights in regard to my risk management. I have a ready template for you all using the martingale strategy. You could also check that out. Just put in your deposit, put in your risk appetite, and it calculates for you exactly how to manage your risk. So first things first, please do not chase any spike. This spike on, say, the 5 minute, you don't want to chase it because we'll probably get some kind of pullback. It's pretty much where every institutional, trader, hedge fund, and algo reacts in milliseconds. These areas are catastrophe if you don't know how to manage your risk. Also, our job is to simply read their footprints, all right? We are looking at candle behavior. Okay, look at candle behavior. How are the candles behaving around these zones, right? You're looking for any kind of liquidity grabs at true market highs and lows. And for that, I have another interesting tool on bar chart called highs and lows. These are the true highs and lows. You also want to add some indicators like the average, true average range. All right, we could remove the mark D. True average range, map that out on, say, the 1 hour. See how far you are from the equilibrium point, and that could give you some perspective on where we're headed to. So after having all that background noise, remember we could also check the court noise, the court data, the commitment of traders report. I've multiple times explained to you all how to do that. You also simply have to just head over to a bar chart, and this is a report that shows different traders and how they're positioned in futures. You want to look at commercials for those particular pairs, like Canadian USD in our case today. You want to look at big companies managing risk for the commercials, right? For the commercials, and you want to look at the summary report. Once you open that, you'll have some perspective. Commercials are big companies managing risk. They often buy low, they sell high, considered smart money and often contrarian indicators. While the non-commercials, who are speculators, these are hedge funds and big traders, they trade for profit and they follow trends. Extreme low short positions can signal market tops and bottoms. So today we're going to look at Canadian and US dollar. If you look at the summary, we are looking at, where is it? There we have it, USD, Canadian USD. There we have it. Net positions are short. We had a net change of 7,000, long 18,000. The change was minus 2,000. So short positions are 132, and we have the that illustration to the right, whereby we have more to the upside. So we have more people to the minus 183,000, right, versus minus 53,000. So these are net positions, and you could easily see that we are moving net change long versus net change short is clearly evident to the downside. Now, with all that background information, all right, you want to use all this to confirm. So you use them up as some kind of context tool, all right? The heat map in particular, where is that? The heat map in particular, where's our heat map here? All right, we'll use that one. Right, so if you're looking at some confirmation, more confirmation, before you trade CPI, any CPI, actually any fundamental event, you need to check if the USD is already strong or weak. Okay, after the release, just refresh your page to see which pairs flipped color. You have to have that on the side, right? I also use bar chart as well for the Forex market map. It's a good tool, and in this case we will be looking at CAD. So you want to point at CAD USD and see which other correlated pairs are there and what are they doing, how are they performing. All right, after the release you just refresh it and it will tell you which markets actually reacted hardest. So in this case, for example, right now we're using USD, and USD is glowing right here. They're different colors, and depending on how they glow, all right, you could quickly pick out your pair. Pick out your pair, Canadian USD. You could see on the it's just JPY as well. So Canadian USD flipped bearish due to the fact that we had some kind of contradictory data coming up. So you get the feel of the market using some of these indicators. It's very important, and it gives you some kind of tactical framework. Now, let's get a little bit tactical. Before any CPI trade, all right, my pre-release checklist looks like this. If my bias is neutral, I watch fast reaction before taking any sides. The structure is green, red and blue. You could use some indicators like the EMA, all right, or you want to use a simple moving average. There are many actually, and for all these indicators, just go to the YouTube channel, check them out, see how I play around with them, and get your favorite. Now, a moving average on, remember we're using very short time frames because we're in and out. We don't want to get stuck in any market. So it's clearly a downtrend, meaning the US data came out pretty bad. The confirmation was right there as well. We have Canadian USD. If you check USD, where is that? Yes, Canadian USD. It means it came out bad. However, if you check out what's happening here, you could see that we are in some kind of downtrend. So the execution is don't touch any candle, all right? Just wait for 2 to 4 1-minute candles confirmation, and only then you could move. You also want to highlight the support and resistance zones, false breakouts like this one, what is actually going on. Look for spikes, look for retests on the bigger time frames. I like to use 1 hour, all right? So something like that. Okay. I'm trying to summarize, my trading idea and how I look at this from the time the data comes out up until I enter the trade. You also want to look for continuation setups, that is from 5-minute time frames to 15-minute time frames. Is it continuing? Ask yourself those questions. Now, my risk model is usually 2%, 1%, all right? And the reason I like using pocket options, it gives you that opportunity. You don't have to scribble around with any kind of gadgets. You just simply put your risk appetite there. If it's 1, if it's 2. All right, there you go. There you have it. So I'll be risking, again, I'll be risking 1%. 1% of my entire portfolio will be about $400, right? So if we split that with my martingale strategy, please check it out. It's in the chat below. You just go to my community chat. It's pinned up there. You could get it for free. You'll be able to manage your risk. Now, with $400, with the background noise, some kind of understanding of the market structure, don't forget that it's still a little early, all right? The time is about 12. You want to stick to New York sessions, and we'll have that as well coming in. Now, after you've risked, let's just break it down. If you have 1%, if you have, say, $1,000, you're risking 1%, which is $10 per position. Your max session drawdown, for me, is 5%. If that is hit, I just step away. You know, this is how the pros stay alive in this kind of volatility. And you also have to control your aggression, right? You set the timer, everything is working out. And once it's out, you just start to monitor the charts. Now, another key factor that I like to look at is the data. Now, you could see how seasonal tendencies also affect. If you read this chart very carefully and you just scroll down all the way up to the technical note, this is key and I'll read it for you. Consumer Price Index measures the change in prices paid by customers for goods and services. It reflects spending patterns for each of 2 population groups: all urban customers and urban wage earners and clerical workers. All right. The all urban consumer group represents over 90% of the total US population. That right there is something many people miss. And this is where it gets even better. They're saying that the urban consumer group represents over 90% of the total US population. So it's based on the expenditures of almost all residents of urban or metropolitan areas, including professionals, self-employed, the poor, the unemployed, and retired people, as well as urban wage earners, as well as those living in rural, non-metropolitan areas, farming families, people in the armed forces, and those in institutions such as prisons, mental hospitals, etc. Right? Now, if you scroll a little bit lower, you'll see that CPIs are based on price of food, clothing, shelter, fuels, transportation, doctors, dentists, services, drugs, and other goods and services. All right, now we scroll back up. You want to also pay attention to the transmission of the material. So they are saying that the CPI increased 0.3% on a seasonally adjusted basis in September, after rising 0.4% in August. The Bureau of Labor Statistics reported today over the last 12 months, the all items index increased 3.0% before seasonal adjustment, right? Note that September CPI data collection was completed before the lapse of appropriations. Now, this is very important. The index for gasoline rose 4.1% in September and was the largest factor in the all items monthly increase, as the index for energy rose 1.5% over the month. The food index increased 0.2% over the month, as food at home index rose 0.3%, and the food away from the home index increased 0.1%. So anyways, what they're trying to say is, as much as we have negative data here, right, we had some kind of increments. It decreased but on a year-to-year basis, it has increased. Now, as much as these are all bearish, you can already see some contradictory statements there, and this is what many of the novice traders miss. This is key. If you have a year-to-year increasing, but it still shows negativity, then you want to go slow with that. And you'll see this as we move forward, because we are just starting Q4. We have 2 more months to go, and we expect more interesting price action from some of these instruments. Now, moving to the technicals, understanding that the price came out bad and we expect a move down. So I'll have a ray. Okay, where we have this. Let's remove this. Let's get rid of that. Okay, we want to concentrate on USD CAD. USD CAD. So we have confirmation that this will go down. All right, we've had a breakout. Now we are trying to test this previous support that turned resistance. You could move on to the 1 minute and see what is happening. On the 1 minute, we are having some testing right there going on. Okay. You also want to time this so that by the time New York momentum comes in, you are in. Now, I like to use 15 seconds. 15 seconds. And I'll wait for some more confirmations. If we go to the heat map again. The heat map, and we are looking for the Canadian USD. Let's check that out. We have the Canadian US dollar. There you have it. It shows green, all right? The base currency shows that it's strong. So this is another, precaution to be a little bit cautious trading ahead. If you look at GBP CAD, everything versus CAD is moving up. It means Canadian dollar, all right, is weak. Canadian dollar is weak. However, the US data came out also bad. All right, it came out very bad. But here they're saying, all right, the change in the price of goods and services purchased by actual greater than forecast is good for the currency. Okay, actual. This is the actual. If the actual is greater than the forecast, it's good for the currency. Now, this is evident that it's not really good. Okay, it's not good. We have contradicting factors here. Now, if anything is contradicting, doesn't make sense, you move to the next asset. As you can see, we're having USD getting stronger now with the micros. I like to fade such moves. I like to fade such moves. And in this case, I introduced the fib. Fib is a really nice tool in such cases, because firstly, we understand that the price will go down mid-term. So you want to get the where is it? Oh, there you have it. Yes, you want to get the high and the low, the swing low, and that pullback. Okay, we had one swing, one wave, and another wave to the downside. Now, if it could knock on the 0.6, all right, I'll move this triangle. I'll move it so that we can have a zone over here, and I'll make this zone. Hold up. I'll make this zone. I'll change it to red. Okay. Now we have our set position. to the pullback at around 0.619. 0.619 is where I will be having my orders set. Okay. Now, to avoid all the cloud, just remove the Fibonacci. And with all the background information, guys, again, this is, if you're here for the first time, I have a set course for you. Just check it out. It's free. You don't need to pay anything. Go check out my YouTube. Learn, come and join. We have an incredible community growing by the day. Now, prices reached my target. With all the background noise, information, you know what you're doing. You could break this trade down and immediately press the right there. Just give it some more time. Give it some more time. Let it close. Let it close. Many of you will be targeting this previous pullback. This supply zone, support turn, resistance. But once this closes, I will go for the sell. So I set the sell right there. All right. Set the sell, and we have 6 seconds. So we have 6 seconds to go. 1 second. All right. So that is our first trade. We have okay. We have our first trade, and we lost 1%. All right. Now keep that in mind. Keep that in mind. We still have 2 more trades to go. What I'll do, I'll move this right up there to the previous Phoebe. Where is that Phoebe? Let's put the Phoebe in here once again. Okay. We'll have that Phoebe. We'll have that Phoebe. Now with martingale, you wanna we've tapped the one. Where is that? The okay, we just had to move that a little bit down there. All right. So the 0.7, we'll try the 0.7. Okay. With the martingale, you have about 5 chances. Now, depending on your risk appetite, you want to ensure that you're risking not more than 2%. So we had 2 chances. We see momentum coming up really hard. CAD, the CAD data over here shows that it's still in the red. All right. So CAD pairs are doing quite bad, while USD card pairs, US pairs are doing really well. So you just have to wait, be patient. We had that, and we could go for another one here. Okay, if we have a push up. All right, there we go. Let's try that out. And of course, you can increase your oops, there we have it. We have another 1%. Okay. Now, the beauty about using this 15 seconds is you never have to worry again, because if you, for example, if you have the martingale, copy of the martingale, you could check it out. I'll give a free template. All right. Oh boy, doesn't open here. Okay, no worries. So the idea about the martingale is you keep increasing your risk until you break even. All right. So if we've used 2% so far, you just have to move to 2% now once in the bid to get back what we lost. So we have about 3-4 chances. Press the sell there. Now we're risking 2%. 2%, and we should get back what we've lost plus some more pocket change. And there you have it, guys. 1,256. All right, which is not bad. Which is actually not bad. That was a 59% increment on our portfolio. However, So we had 2 losses, 1 win, and you could keep doing the same thing. As long as you have the right risk management, you'll be able to recover all your loss. Now, as you could see, price is moving up. Price is moving up. It keeps moving up. If you want to know more about this, we could always move on to our community. Check it out. Subscribe to my channel. We'll be discussing some of these tricks, and we usually finish our Friday very strong. We've had almost 75% profitability today, and we're left with 1 session. I'll keep 2 more shots for the last signals, and check you out, guys, next week. See you all, and